Hey, good afternoon, everybody. Going to go over Forex trades for today, Friday the 13th, actually, March 13th. After four trades, pulled out 14.5 pips adjusted for size. All four trades were 20% of our normal size. So let's go. First, I wanted to talk about the economic data that was released this morning. Again, some terrible data. We heard PPI, which is a producer price index, and we also heard from consumer confidence, which came in terrible. Just as we've been saying, all along, it's the economy's gotten weak, and it's showing signs, and it's starting to come through now with the signs of the weakness. So we're all for normalizing interest rates. We're not for raising rates because the economy is, too strong or thriving. Just want the Fed to say the real thing. Bottom line is rates should be higher, one way or the other, whether you're just to normalize them or because the economy is heating up. But the Fed's not going to be able to justify raising rates with the way the economy is coming, at least recent data. Now, if they want to raise them to normalize the rates, it'd be a different story. Will that hit the market? Most likely, yes. Could it slow the economy even more? Most likely. But it might be needed, just for the sake that the Fed has no ammunition left. The only ammunition they're going to have if they do not raise rates, the only ammunition they're going to have is to begin a QE program again, which has proven to really only stabilize the recession we were having. Some estimates are that that almost $4 trillion in QE spending only amounted to 2.5% economic growth over a course of 4 or 5 years. Which is nothing. So I don't know if that's the right place that they should be going with it. But again, as we said yesterday, if all central banks are painting themselves in the corner with QE, with extreme, zero bound interest rates, then maybe it's really not an issue. So we have to readdress that and see what goes on. As far as our trading, let me just touch base again. The producer price index came in with a negative 0.5% versus expected growth of 0.3%. The core PPI came in at a negative 0.5% compared to an expected positive 0.1%. And just absolutely horrible. And then the consumer sentiment came in at 91.2 versus expected 95.5. Terrible miss on that end. So it's just more proof of what we've been saying about the economy. Let's go to our trades. 4 trades, size adjusted, pulled out 14.5 pips. Not size adjusted, that's equivalent to 73.3 pips. First trade you're looking at here, Euro Australian dollar. We were short this 1.37868. Basically pushed on the trade. Maybe got impatient with it, but it just wasn't working out. We were in a couple other positions at the same time that we were getting out of, so we decided to liquidate that one. Swiss franc to Japanese yen, we were short this 121.040. Covered this on the way down, 120.761. It was coming to, the half figures down here, but when it was on its way down, there was all these tops here that we were looking at, so that's why we covered where we covered. If we had bigger size, we could have pieced out, but the fact of the matter is we only had 20% of our normal size, so we just got out of it. You can see it came right to the half figure, bounced right off. It came right back up to the figure, 121, fell off that, tried to bounce off the half, and then finally broke through that. So, but, we'll take it. It was equivalent to 5.5 pips. Euro, US dollar, we were short this 1.06379. Definitely covered this a little too early. Actually, we covered this on the way down here, not over here as the graph is showing. But we covered it at 1.06104 ahead of the figure, and you can see what it did there. It bounced off the figure, just like the last one. Just the bounce was very anemic. Euro to US, anything euro based has been weak. Euro US dollar has been insanely weak. We all know it's headed to parity. I read a report this morning. Goldman Sachs is looking for it to actually go under parity. That was the first report I've seen saying that. So interesting what's going on with it. U.S. dollar's been rallying against almost every currency, but like the euro's just been getting slaughtered. And then the last trade was pound to Australian dollar. Just about made money on this. We were short 1.93459, covered 1.93321, picked up 13.8 pips, size adjusted 2.7 pips. Probably should have held off because it was going to make a run to the figure, and that's exactly what it did. It ran right to the figure, bounced off that, went back up to the other figure of 1.94, and eventually fell off that. So we should have looked to cover close to the figure. But again, there's all this congested area here that could act as support. So we just covered it and moved on and got ready for today. We do have one open position, which is a euro to Australian dollar. We've been up and down. We've been down on that. Then we were up for a while this morning. Now we're down on it. Just a small. Again, it's 20% of our normal size. We're down about 2 pips right now, so it's no big deal there. So that's it. Wrap it up. 4 trades, 14.5 pips. Not a bad way to end the week. Nothing great, but pretty good. If any signals come out, they'll be coming your way. Doubt there will be, considering it's Friday and there's only a few hours left. We'll be looking to trade again Sunday evening and Monday. So have a great weekend, and we'll be back Monday, assuming we get some action.